please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata Venkatesh and with me are Anuj and Sonia. The markets will take a breather today because yesterday the cat was away and therefore the mice had fun. But today the US markets will trade after the extended weekend for Martin Luther King holiday. And therefore the bull rampage or the bull rush, sugar rush, will perhaps pause a bit. There is a bit of confusion even in the global markets with dollar weakness somewhat inexplicable. I read a wide range of articles and spoke to experts. Dollar is weakening because of the expectation that European central bank and other central banks will start to tighten. But nevertheless, the US markets are doing very well. The US economy is doing well. So the dollar weakness is a little inexplicable, but that is helping the bull run for sure. When dollar weakens, all risk assets do very well. And you can see that in commodities, in particular in crude. Now coming to crude, I think there is a bit of a problem for Indian macros. First, we were worrying about trade deficit because of crude. We were worrying about fiscal deficit because of crude. Now we are worrying about trade deficit. The trade deficit number that came yesterday was pretty worrisome. So, today macros is something which is going to be negative. Whether the markets will take cognizance of it now, we don't know. But to be sure, both the deficits are becoming a spot of bother.
Oh, yes, they are. In fact, a 3-year high for the trade deficit numbers. I'm going to talk about that in greater detail in a bit, Lata. Good morning. Anuj, morning. Yesterday, we saw a bit of volatility in the market in the sense that, on one hand, the Bank Nifty did very well. But on the other hand, the mid-caps have started to suffer a bit. How would you, what would the prognosis be for today?
Morning, Sonia. I think for me, the big story was that the Bank Nifty broke out, and that was really, that was the point I made in the morning as well, that could today be the day when the Bank Nifty hits a new all-time high after having gone through a lot of underperformance. And it's broken at 2.5-month consolidation, and it's done that despite all the negative headwinds. So if it gets followed through, in that case, everything else is immaterial. And even crude for us is not a new problem. Yes, you may want to be a reluctant bull right now because the liquidity gush is so strong. You know that it's a problem. You know that bond yield is a problem. But at the other hand, you know that there's money which is chasing stocks. So what do you do in a market like this? Maybe get your risk management in place. Maybe buy some put options to protect your portfolio. But have to trade this market on the long side. That's the only trade. You got to look for dips to buy. Chasing momentum, could be, punishing, especially like yesterday, for example, if you're chasing Nifty, you wouldn't have made any money. If you chase Bank Nifty, maybe you made some money. So, and even for the mid-cap index, look, for last 2 days, it's underperformed 3 days, but even after that, it's up 2.7% this month, and the Nifty is up 2%. So, these phases will happen. For me, the only problem as in the data is positive, but it could lead to a bit of a problem is the big buying by FIIs in stock futures and index calls. When that starts to happen, either that's an indication of a pre-budget melt-up. That's why, you want to just go all in and buy into some of these stocks. The problem is that if you don't get follow-through, that makes market vulnerable. A long market, net long market is vulnerable to any kind of decline, and short market, of course, has cushion of short covering. And, apart from the crude, the other big theme globally which has played out really, and it's continuing to play, is the dollar weakness. I think that dollar weakness generally leads to, risk buying. So that is why, you have to look at this crude play, whether it's just because a lot of money is going into speculative assets, or is this economy related. If the case is that everything is chasing risky assets, in that case we may have a positive correlation. Crude may go up, market may go up. That might be uncomfortable for a lot of fundamental investors, but that's how the market has been all through last year or so.
No, actually, the dollar weakness is the biggest conundrum for financial markets now. That's why I think I alluded to that fundamentally because that's confusing people. it should not be weakening so much because the US economy is doing so well.
Yes.
And yet it's a one-way street.
Oh, absolutely. But you know what worries me is within the trade deficit number, of course, that $15 billion number is nothing to scoff at, but the export growth has halved compared to what we've seen in the last few months. How much of a concern would that be?
No, I think the trade deficit is beginning to be a concern. I mean, it's not the biggest elephant in the room, but if it continues in this, last 2-3 months we have got 13.5, nearly 14 billion. Okay, we thought it was one-off, GST, whatever, disruption. But when 3 months in a row, and now it is 15 billion, 14.89 is 15 billion, that's a bit of a worry. This number I saw only before the taper tantrum. When there was a lull and everything was going fine, but the trade deficit was burgeoning. We had one freak number in November 2016, but that was a freak number. We had 16 billion. Before and after that, we were at 9 and 10 billion. So if the only time we saw consistently $15 billion, 16, 17 trade deficit was pre-taper tantrum. And that becomes serious because with our flows, with software flows and with Indians living abroad and remitting to their families, we can easily manage 10, 11 monthly deficit. After that, okay, $1 or $2 billion we can take as current account deficit. Thereafter, it becomes a problem. We are not able to, bridge that gap unless you have FII flows. Then you become dependent on FII flows. We are not self-sufficient. The other things which are disturbing is the gold import. Gold import for 2 months in a row was $3 billion. We could take it in our stride. Now it is almost, for the third month in a row, almost $3.5 billion. That again means about 73 tons gold imported. If you multiply it by 12, then it becomes 900 tons, which was what we imported in 2012. Again, pre-taper tantrum. We have very good reserves. We have several other things going for us. So it's not as if we are at a pre-taper tantrum stage. But some of these numbers are beginning to look a little uncomfortable. And exports not growing is a very big problem. The 3 export products that have not grown are all labor intensive. Textile exports, contraction by about 6.7%. Gems and jewelry, 2%, which is completely inexplicable. If gold import is growing by 35% and precious stones are growing by 90%, then this kind of gems and jewelry exports at 2% is inexplicable. Again, very, very labor intensive. Otherwise, the import is very strong, and that is really a function of commodity prices. Non-ferrous metals exports has grown by 90%, crude has grown by 35%. You can't do much about it, that's commodity prices. It is just that the other side, exports are not growing with speed. So I think there is a spot of bother here. It is the beginning. It should not, it should not be a monthly affair. Then we have trouble.
Okay, well, that's the big headline of today, the way in which trade deficit numbers have soared. But on that note, let's start the show and tell you what our wise experts have to say as we head into trade this morning. Stephen Dover of Templeton, who now manages the emerging market funds post Mark Mobius' retirement, says he expects emerging markets to remain on an uptrend in 2018 against a favorable backdrop of robust economic growth, increased asset inflows, solid foreign reserves, strong current accounts and stable local currencies. Dover adds that valuations in emerging markets remain attractive, trading at a discount to their developed market peers. Earnings of many emerging market companies have also been gradually improving in terms of profitability, margins and return on equity. So that's a positive call coming in.
On emerging markets. And here's Dover speaking about India as well. Stephen Dover adds that strong macro fundamentals in India, under-penetration and strong management talent make Indian corporations attractive to them, but fairly rich valuations with near-term earnings challenges makes Templeton neutral on the Indian market.
Okay, let's also get you some money market views now as we head into trade this morning. Bhaskar Panda of HDFC Bank says the euro had started moving higher post the ECB meeting and consequently the dollar has now moved below 91 levels. He expects the rupee to continue to appreciate and expects the dollar INR to trade within a range of 63.40 to 63.60.
Okay. And here's the bond call. Bhaskar Panda says post the CPI and WPI release, expectation of a rate cut has receded. He adds the 10-year benchmark bond yield has been flat for a couple of days and he expects it to trade in the range of 7.43, 7.46. That's the old 10-year, shouldn't move much today.
Okay, the US market, of course, was closed overnight because of Martin Luther King Jr. Day. But what about the rest of the cues? Here's Mangalam with the world view.
That's right, Wall Street was shut yesterday celebrating Martin Luther King Jr.'s Day, but the dollar index was trading and that one fell to a 3-year low. So the dollar index is actually at a 3-year low and the euro dollar at a 2-year high. As a result of that, we saw some moves on commodities. Gold is at a 4-month peak, but shifting across the Atlantic, a tinge of red across the European indices, that after a 2-week rally that we saw across all the 3 frontline indices. But in the peripheral indices in the European region, we saw the Italian index, that one really stood out and outperformed, and that was because of one stock, which is Azimut Yachts. They've doubled their dividends and that stock moved higher 13% from the Italian index. From the commodity space though, we of course are talking about crude, but Rio Tinto, that one met its 2017 iron ore guidance with a 1% gain, and they expect 330 to 340 million tons production in 2018. That's the guidance that we sought from there. From the emerging market space though, there is a fair amount of green on both the Brazilian as well as the Russian indices. Coming to the Asian markets, all of them in the green. The Nikkei really outperforming despite the strengthening that we're seeing in the yen. Hang Seng too doing well. So with everything doing well, the SGX Nifty indicates a flattish start for our markets at record highs.
Okay, that looks very good for us, starting at record highs again. Thanks a lot for that, Mangalam. But there is a niggling worry with oil now inching up to over $70. That's crude. It's a 3-year high, and Brent crude prices are now at levels that we have not seen before the oil slump of late 2014. Mark To, Head of Research at Wing Fung Financial Group, joins us on the phone line. Mark, good morning. Thanks a lot for joining us. Should we worry about this at all, or is it just a function of dollar weakness?
Yeah, thanks for having me. I think oil price is now enjoying the optimistic atmosphere. And basically, if you look at the charts from a chartist point of view, it has crossed a lot of major resistances and is going to extend the advance in this year. Basically, I think we have the fundamentals which are very supportive. First of all, the global economy is going to have a strong recovery, so strong that the central banks are going to be able to have more interest rate hike, or even have the normalization of the QEs, such as in the Eurozone. And also for the oil producers, they have the agreement, or they have the coordination not to supply too much. That may improve the overall situation. And basically, as you said, after the 2014 tumble in oil prices, we are going to have a more and more recovery in that sense. So combining the demand and supply conditions, we can see that it is moving up. But of course, whether we can see the crude oil futures in NYMEX in the States are going to reach the same level as the Brent futures, it may take some time. But for me, the major risk that we should be have some kind of tension is the production of the U.S. shale oil, and because of the alternatives or the new energy forms, we are going to see that the traditional oil productions may be more cautious not to be supplying too little, so that the competitors may be having such an advantage in the field. But overall speaking, I think it is going to move up, and $70 is not really a large resistance at this moment.
You spoke about the supply. Is it the OPEC-led production cuts that will continue to keep the prices higher as well, apart from higher demand? Because these production cuts are expected to go through till the end of 2018.
Yes, exactly. The OPEC oil production cut, or even the freezing of the production, is going to have a lot. And we can form such an expectation from an investor's point of view, and because of that, such as self-fulfilling prophecies, or the lack of expectations, may be so strong that, at least from a chartist point of view, we are seeing more and more trend followers in that direction, and that may push up the oil price at least for the very short moment, such as for the coming few weeks.
So what should we work with for the, say, for the next 2 months? Would the average be between 70 to 75 for Brent, or would it be 65 to 70 for Brent?
Oh, yes, I am more optimistic than before. And I remember last time, I think $70 is reachable, and now more and more I think it is reachable. And I think it is going to, at least, it has to cross that, you may say, cross the level to stay par with Brent futures. And it is a very, very important signal. From time to time, we look at the differentials between Brent and the U.S. states oil prices. And now we are going to see that that is going to happen, and the more optimistic atmosphere will going to be happen.
Okay, Mark, thanks for stopping by and speaking with us. That's the comment coming in from the Wing Fung Group saying that not only production cuts by the OPEC, but higher demand because of economic growth is something that's supporting the crude market. Also, remember, the dollar index is at a 3-year low as well. So when there's a weakening dollar, that spurs investments into a lot of liquid commodities like gold and oil. Didn't have any cues from the US markets. They were shut for Martin Luther King Day. But the other markets are just about flatlining this morning. The European markets actually closed in the red, so just keep an eye out on that. But what about our own markets? Our research team is here as always to give you the list of top 10 stocks to watch for the trading day. Hi guys, morning. Anuj, first up.
So, Sonia, as we move towards budget, really a lot of budget stories is what you got to focus on. I think Kimsey broke a story yesterday that we could have a gold policy which could suggest import duty of 0%. Currently, the import duty is 10%. And also, maybe the Niti Aayog is in favor of reducing GST on gold from 3% to 1%. So, my sense is, you could focus on the gems and jewelry stocks. PC Jewelers, of course, has been a complete beast altogether. So, it's the strongest of the lot, up 28% this month. So, maybe the market had an inkling of what was coming. So PC is really the one which stands out, and TBZ is the other one which has kept pace with the PC Jewelers. So TBZ is not really in the F&O space, but that stock also has gone up along with the PC Jewelers. The one that has underperformed is Gitanjali Gems. It's bounced from 20-day moving average yesterday, so that could be an interesting one to watch out for because that's the other one where we have seen some kind of price build up yesterday. And of course, if you are a risk-averse kind of person, then the Titan is always there, right? So Titan is the one which, is almost back to its highs, but had a minor correction, so that could be interesting.
I think all these four guys will be best placed to check out why imports of gold and precious stones is rising by 35 to 90%, but export of jewelry is rising by 2%. Something's going wrong there. Maybe it's short term. But I think the stock of the morning quite clearly is going to be Delta Corp. Mind-boggling numbers, Mangalam.
All in, Lata, all in. That's the word coming in for Delta Corp. Because if you take a look at it, revenue growth of 57%, EBITDA more than doubled. At the same time, the margins came in higher by 810 basis points, and the net profit 44 crore versus 10 crores. So talking about doubling, quadrupling your money at the casino, that's exactly what they've done in the numbers. Though I would also say that the last quarter, because of demonetization, they did see a sequential decline in their numbers. So they are affected by that base. But any which way you cut it, it is positive. More than that is the prospects for this industry which are positive. MK wrote a note, and yesterday we had the management of Vian Industries speak to us as well. So MK says that the Indian gaming industry has the potential to go up to 10,000 footfalls per day, and that compares to 1,500 footfalls per day right now. So on the back of these strong tailwinds, Delta Corp's earnings could double over the next 2 years. They have a buy rating on the stock with a target of 411.
Okay, Mangalam, thanks a lot for that. Also with poker picking up, what happens in casinos is, of course, the house always wins, right? But anyway, in poker is more for casinos, more of a brokerage business. Regardless of what happens, the only income stream is the 5% bet that they get, for every bet. So that way, it's a consistent stream, and that's why
it's their annuity.
It's their annuity, and I think the Adda 52 acquisition, I think, really was, something that they got at a really cheap price. So that's done really well for them. But that's of course on the way up. On the way down, the stock of the day today could be Federal Bank, and we were all waiting for numbers in market hours yesterday. They didn't come, and post markets there are a couple of problem points.
Well, Anuj, it's operationally a very weak quarter for Federal Bank, considering the history that they have given in terms of strong performance. This quarter is operationally very weak. So if you look at the gross slippages, they are at 435 crores. Now that includes a one-off from the educational loan that is about 71 crore. Even then, it is at 364 crores. That compares to their quarterly run rate of 250 to 280 crores. So that's on the higher side. And the net slippage, that is after you deduct recovery, upgrades and write-off from the gross slippage, is at 190 crores. So that compares to YOY at 117 crores. So that is also at elevated level of last 5-quarter high. Operating profit growth has declined to 18.2. Now remember that operating profit growth in Q3 FY17 was at 46%. So coming down from 46 to about 18%, despite the fact that loan growth has been steady at 20% plus, is another weak performance. Loan growth has also declined from 31.5% in Q3 FY17 to about 22%. And when loan growth is declining, your slippage ratio has increased from 1.64 to about 2% now. So overall, the performance remains weak. We could see the stock in red today.
Okay, actually, for me, this is going to be something which could be a challenge to the Nifty Bank. Federal has corporate exposures, and if the first bank with corporate exposures, I mean, you don't put IndusInd in that category. Federal has more corporate exposures than IndusInd, and if that's showing trouble, then I smell trouble for corporate banks when the numbers come. It could be a harbinger. So put that on your radar when you look at all the corporate banking stocks.
Okay, and as he pointed out, right, 22% loan growth, but the fee income growth is just about 13%. So that's something to worry about. In fact, we will try and get to the bottom of that. But before that, let's find out more with Mangalam and why he's watching Z-Learn this morning. Mangalam, how are the numbers?
Well, the numbers are very good. So a good sign is that people are not only going to casinos, the kids are going to school. So that's good. 72% revenue growth, 71% EBITDA growth, a decline of 10% on the finance costs, and a low base means the net profit actually grew much higher at a 255% growth, closer to that 8 crore mark. A sharp bump up on the revenues were on the back of one, their core business, the educational services, which were up 20% and the margins expanded there. But also they had a new vertical, manpower and training, which gave them 14 crores of revenue versus nil in the base quarter. So that added to their revenues.
Okay, you're growing up, Mangalam, you're growing up. Okay, let's get to Anisha. She has a bunch of stocks that she's watching out for, partly for results and other reasons, Anisha.
Well, yes, Lata, I will start with Sadbhav Engineering. Now, if you pull up the 6-month chart for that company, that has already gone up by 50% since October and suddenly. But Credit Suisse believes there is more upside to it because they have now upgraded the price target to 480 versus 360 earlier. The stock currently is trading around that 410, 420 level. Now, they like the fact that the execution is improving. The ordering pipeline we are hearing is looking up in Q4, as well as the company balance sheet is strong and the valuations at 15 times the forward earnings looks cheap to them, and that's why they've upgraded the target on that one. Moving on to India Grid, well, good news coming in for the unit holders there because the distribution per unit has come in strong for Q3, and also this suggests that the company is on track to meet the FY18 guidance when it comes to the distribution. Yes, quarter on quarter, the Q3 numbers have shown a little bit of dip when it comes to the revenue and EBITDA. Nonetheless, the distribution has been strong and that should be taken well by the street.
Okay, Anisha, thanks a lot for that. The big macro story, of course, still remains crude oil. Now, above 70, almost approaching 71. Manisha, good morning.
Oh, well, absolutely, Anuj. 3-year high, $70 is holding. We are up 7% in this year, and it's up and about is how you see the crude oil prices. Fundamentals are all positive. You have the US dollar, which is trading at a 3-year lows. You have the OPEC compliance, which is near 100%. You have gasoline, diesel, jet fuel demand, all at a very strong estimate from Asia and Europe and US as well, and that really has been supportive. Add to that the geopolitical tensions coming in from Iran, the US stance on it, that has been adding to the premium. The only thing that's weighing is that if it continues to hold at 70, you will see US shale output ramp up. So that's the only thing that hasn't led to a huge run-up in prices. But then the speculative longs are at record highs as well. So from the money to the fundamentals, everything pointing to further gains here.
Okay, thanks a lot for that, Manisha. That's crude, and of course we know all the stocks that will be impacted because of higher crude.
Being positively impacted. Yes. Another gush of blood in Aban and perhaps even ONGC. Not so much ONGC, but certainly Aman and the Dolphins are going to be advantaged even if the OMC struggle.
Exactly.
Okay, well, let's move on and talk about some more stocks that are in the news, some earnings that came in post-market as well. Ronit, what do you have on your list?
So actually one stock, that is ABC Bearings. You know, remember in July of 2017, Timken India almost paid a premium of 77% for the merger of ABC Bearings. And they came out with a strong set of numbers, you know, revenue up 8%, EBIT up 11%, good expansion in the margins, but the PAT, that was up by 40%, largely due to lower tax. Moving on, BSE, they have approved a buyback of around 15 lakh shares at 1,100, which is a premium of around 11% from current market price, and the total buyback will be around 166 crores. Back to you.
Okay, thanks for that. That was quite snappy. Here's a quick recap of our top stocks now. Stocks expected to gain today: Delta Corp, PC Jewelers, TBZ, Gitanjali Gems, Titan, Z-Learn, Sadbhav Engineering, IndiGrid Trust, ABC Bearings, ONGC, Aban Offshore and Dolphin Offshore. While stocks expected to be under pressure today, Federal Bank posted its weak numbers and the oil marketing companies BPCL, HPCL and IOC.